focus, I want to highlight transmission and distribution as a sector as well. And one such company in focus over here is Transrail Limited. Now, if you are looking at why the company is focused, it's on the back of an order win that we are seeing, about 837 crore of an order that it received in its transmission and distribution segment, which takes its cumulative order inflows to 3,157 crore, recording about a 57% of a growth year onwards. But to discuss more about the strategy forward as well as about these new order wins, we are joined in by Randeep Narang, the MD and CEO of the company. Mr. Narang, it's a pleasure speaking to you again on this. But, I just want to start off the conversation with the order win that we are taking in picture. Seen about a 57% of a growth on a year-to-year basis. Just want to understand from you, considering these strong order wins that we are looking at, the guidance that you've given about 22 to 25%, does it not rather seem on the more conservative side comparatively?
Thank you for having me on your show. So the orders which come in actually have a 18 to 30 months of order cycle of execution. So whatever we have given guidance of 20-25% will be based on the orders we have in hand, and the new orders will come into execution almost 6 to 12 months ahead. So for this financial year, we maintain our guidance. Yes, our order book is positive, it's growing. We've grown around 57% over last year. And we're also looking at a healthy order book closure this year, order intake closure. So we are on schedule with building a 2.5-year book to bill, and which is what we intend to do.
Right, sir. Also, if you could give us some idea on this front. Now, if you look at Power Grid, what percentage of your orders come from Power Grid? Because for FY27, I believe Power Grid has a capex plan of 35,000 crore. For FY28, they have a capex plan of 45,000 crore rupees. So realistically, what is the opportunity size for Transrail Lighting here?
So we are one of the contractors working with Power Grid over the last 40 years. We almost 70% of our order book for domestic is with Power Grid. We are one of their valued partners and contractors. So if their capex does grow, we will look at a 10-12% market share definitely. And we are happy with that. And we would like to service Power Grid in the best possible way we can.
Okay, just I want to understand on the bid pipeline as well, because in the previous conference call, if you're looking at, you've given about a 1 lakh crore of a pipeline opportunity, and this pertains to the domestic as well as the international side as well. Firstly, I want to understand from the international side, where are you seeing more of these orders coming in place? And also of this 1 lakh crore, what is the kind of strike rate that you usually have in both the domestic as well as the international market?
So we had given this guidance, and in the investor call, that around 50,000 odd crores is the addressable market for us in India. Another 50 odd thousand crores, give or take a few crores here and there, would be for international. So we are quite bullish about the Indian market. We see a lot of opportunities, and as rightly said, Power Grid is increasing their capex. So we're looking at a 10-12% market share. Similarly, for international, we have a 10 odd percent market share, or a win rate as we call it. We're looking at that. So our order intake plan for T&D, which is 92% of our business, is going to be in the range of 9,500-10,000 crores, which is what we did last year. So we're maintaining the same order input, and we feel that is good enough to give us the buoyancy we need for the next 2 years.
Okay, just on that front, also want to understand from, if you are taking particular geographies in picture, Bangladesh, you had about 12% or also of exposure. Now, this is expected to come down to about 6% by the end of the year. So just want to understand the overall picture in terms of how the Bangladesh order book is shaping up, and are you bidding for any new projects there? What's the kind of outlook that we are building from this particular geography?
So from SAARC, we are doing business in Nepal and Bhutan. In Bangladesh, we plan to close this project by July of 26. So we are today at around 12%, and by end of the year, we'll be around 5 to 6% of our order execution in Bangladesh. As of now, we have no intention of taking any new orders from Bangladesh till the time we finish this job, and that's important for us. We are therefore looking at growth happening in Southeast Asia, Africa, which is our prime drivers going forward this year for our order intake.
Right, sir. Speaking about the African market, can you just give us some idea what is the opportunity in this market, and from where are you getting these orders when it comes to Africa? Is it the government that is giving these orders? Any risk of collections that you have seen in the past?
So I think that's a very good question. Principally, what we do is we only work with multilateral funding agencies in Africa, like the World Bank, African Development Bank. And these are the funding done to various utilities and governments in Africa. So we work with that. And we have a very clear risk matrix. And once we have a threshold cleared on the risk matrix, we look at it as a clear focus area and we send our teams to sit in each of those geographies or countries for a month or two before we bid the job. So we are very careful about the geography, the political risk, and anything around that from a risk matrix point of view. And therefore, we are clear that which countries we'll work on. Currently, we're working in around 15 to 16 countries in Africa, and that's where we want to increase our market share going forward.
Just on that market share part, I want to understand overall the competition scenario as well in the international market that we are speaking about, because there's competition coming in from China as well. So if you just have to take in context in these key geographies that you operate in, what's the kind of market share that you hold, and how big of a competition is China when it comes to the same kind of business that you do over there?
So China, of course, bids into most of the jobs we bid. We also have Indian players. Sometimes we have local players and Spanish players. So principally what we do is we do our design engineering for all international jobs, which is our competitive edge. We also have a very good backward integrated product available in terms of our supplies for towers and conductors. So we are competitive. And if you see what I mentioned in the call just now, we are looking at a 10-12% market share. So we are not greedy to have more revenue. We are very clearly focused on margin-led growth. And that's the way we look at our market share.
Sir, given the strong Q1 and the conservative guidance that you have given and you're sticking to that of 20 to 25%, I wanted to just check with you, are you seeing any kind of execution slowdown in the second quarter?
Well, the guidance is actually based on what we see on an annualized basis. At 1650 crores for Q1, if you annualize it, we'll be in the range of 22 to 25% growth, which is what we are maintaining. Predominantly, Q2 has slightly some headwinds because of the rains and monsoons and stuff like that, contractors going back to their farming. So we don't see much of a difference. We'll definitely look at robust growth in Q2 also. But our guidance is based on the annualized plan, what we call an annual operating plan. And we are firm that we will achieve. And hopefully, if we can, we'll try and better it.
Okay, now just on the capex plans that you have, conductors and towers, we've already talked about this before, wherein you are considerably expanding in these two particular areas. So just want to get your picture in terms of, post FY27, once all of these incremental capacities are in place, what's the kind of guidance that we'll be seeing there onwards in terms of how the revenue growth is shaping up? And along with that, are margins expected to see a backup, to see an expected increase as well, because most of the plans that you're doing is in backward integration as well. So just want to get a picture in both of these metrics.
So it's an interesting question you asked. So principally, if you see, our factories will come into stream starting of Jan, Feb, March or 26, and also in Q1 of the financial year 27. Part work is already started, execution is already started, factory expansions have started, and it'll trickle in till March of 26. So we are good to go to service our current order book. And the future plans are very clear. As you mentioned, we're looking at 10-12% market share. We're looking at margin-led revenue growth. So these factories will support us going forward for the next 2-3 years without a problem. The margin profile we've already mentioned, as in the RHP earlier, and as you see in a Q1, it's between 11.5% to 12%. And that's what we want to maintain. And every order we book, we look at all the angles of how do we look at margin management before time completion and execution skills. So all that is taken into account before we bid. So that's the philosophy going forward. These factories will support us for a future growth. And as you know that the expansion which comes in, the execution framework is 18 to 30 months, 18 to 24 months domestic and 24 to 30 months international. So our factories are ready to back us up in terms of the growth of the company.
So Narang, one final question is about the net debt now. So about 600 crore is the size that we are looking at currently, and because of these ongoing capex plans that you have in picture, that is expected to go upwards. Just want to understand from you by end of FY26, what's the number that we are seeing for this debt levels, FY26-27, if you can give us a picture in both of these years.
So, see, as I had mentioned in earlier conversation, we are staggering the execution, as I mentioned ourselves, 12 months to 18 months. And therefore, there will be internal accruals and there will be also loans against capex. So, I'm seeing a 10-12% increase in our net debt going forward. And again, we'll try to see how do we balance it in a manner that it is doable and it has a good amount of focus from our side.
Okay, thank you so much, Mr. Narang, for joining us and sharing that outlook for the company for the next 2 years onwards. But to discuss more about the outlook of this company, we're joined by a guest of today, that's Avinash Gorakshakar, Director Research of Profit Mart Securities, joining us. Hi, welcome, Avinash. Firstly, your view, you heard the management, the view for FY27 once these incremental capacities are on. How do you view Transrail Lighting? Well, Avinash, you seem to be on mute.
Yeah, sorry.
Yeah, please
Yeah,
go
I think
ahead.
the company's order book continues to be very strong, and I think it's on a very strong wicket. So my sense is, somebody who's going to take a 2-year call would definitely get the benefit of this growth. Investors should realize that once a lot of information comes in the market about any company, the stock obviously gets re-rated. But at these levels, if somebody were to take a 12 to 18-month view, I'm pretty sure that the investor could get a decent risk reward considering the kind of order book, the kind of jobs they do, and I think the kind of moat which the company enjoys. I think clearly execution is going to be very critical. But if they do it, then I think in the next 2 years we are going to see a much better top line profitability and a much bigger balance sheet. So I think the question about net debt, which you mentioned, the management, I think is not an issue as long as orders keep coming and they keep executing them. I think the markets would be worried only if execution takes a backseat.
Well, execution remains the key to watch here when it comes to Transrail Lighting.